Hello, everyone. Today, we are taking a deep dive into this NBC News story, Spirit Airlines is closing down. Thousands of employees and travelers are impacted. We are going to break down exactly what happened here and what the real risks are that every investor should know about. But before that, you are watching Let's Decode the News, where we take the biggest business and finance stories and decode them so anyone can understand. If you are not subscribed yet, hit that button right now. So let us get into it. Spirit Airlines is shutting down in a move that will affect thousands of scheduled flights. And if you ask me, this is as big and as bad as it gets. This is not a small disruption. Thousands of scheduled flights just vanished overnight. People with trips planned, connections booked, holidays coming up, all of it gone in one announcement. And there was no runway, no gradual wind down, just canceled. That kind of sudden stop is almost unheard of in a major airline. Now, let us see what comes next. And nearly as many employees, and I am not going to lie, this part is painful. We are talking about pilots, gate agents, baggage handlers, customer service teams, all of them now in limbo. And when a company goes into liquidation, employees are almost always last in line behind the banks and the bondholders. The people who needed that paycheck most are the ones who get protected least. And that never stops being a hard thing to sit with. Here is the number that says it all. Spirit employs more than 15,000 personnel. And I am sure this hit you just as hard. 15,000 people. That is not a rounding error. That is a small city worth of jobs disappearing in a single weekend. Every one of those people had a routine, had bills, had a life built around showing up to work. And now, they are all waiting to find out what comes next. Now pause here for a second, because this matters. Many of whom will be out of work if the airline liquidates its holdings to pay creditors. So here is the thing. The word liquidates is doing a lot of work in that sentence. It means the company does not reorganize and try again. It means they sell everything, the planes, the gates, the equipment, and use that money to pay back whoever they owe. And employees watching that happen know that their severance and their back pay are competing against banks and bondholders with much bigger legal teams. That is a fight most workers do not win. But here is the line that really stopped me. Spirit, which has struggled to maintain consistent profitability since the COVID-19 pandemic. Okay, so this is the part that gets glossed over. Spirit was already broken before any of this happened. COVID cracked the foundation, and they never fully rebuilt it. They kept flying, kept cutting prices, kept hoping the math would eventually work out. But a business that cannot make consistent profit is not really a business anymore. It is just a countdown. And then there is this. Had been looking to emerge from its second bankruptcy in less than a year. Now think about what that actually means. Second bankruptcy. In less than a year. Not a stumble. Not a rough quarter. 2 trips through bankruptcy court in 12 months. And they were still trying to find a way through. That tells you something about the people running it. They genuinely believed there was a path forward, but it also tells you how far gone the finances really were. Now here is the number that changed everything for me. Despite the company's efforts, the recent material increase in oil prices. And let me walk you through exactly what this means. Jet fuel is the single biggest cost for any airline. And for a budget carrier like Spirit, there is almost no cushion. Legacy airlines can raise business class prices and absorb the shock. Spirit is selling bare-bones fares with no room to move. The moment oil prices spike, the entire business model stops working. And there is nothing they can do about it. Now this one deserves a closer look. And other pressures on the business have significantly impacted Spirit's financial outlook, the company's statement said. So here is why that matters. Other pressures is a quiet way of saying a lot of things went wrong at once. Weakening demand among budget travelers, rising costs across the board, failed merger talks, a bankruptcy process that was burning through whatever cash they had left. When a company statement uses language that vague, it usually means the situation was worse than they are willing to say out loud. Now here is what nobody is really talking about. Last month, Spirit approached the White House for financial assistance. And honestly, think about what it takes to get to that point. You are a private airline. You have already filed for bankruptcy twice, and you are now calling the White House asking for a lifeline. That is not a negotiating move. That is a last resort. And the fact that it became public tells you the situation was already out of control. But before you brush this off, and President Donald Trump initially appeared receptive. Right so, for a moment it looked like something might actually happen. A deal, a bridge loan, some kind of government support to keep the airline running. And if you were a Spirit employee watching that news, you probably felt something close to hope, which makes what happened next even harder. And then Friday happened. But on Friday, reports surfaced that a wind down was imminent. And think about what that word actually means. Imminent. It means it is not a rumor anymore. It is not a negotiation. It is done. And for everyone waiting, the employees, the passengers, the bondholders, Friday became the day everything changed. Here is the part that puts everything in perspective. After negotiations between the company, its bondholders and the White House appeared to break down. And look at that. 3 parties at the table. The company, the people they owed money to, and the White House. And none of them could find a number that worked. When a deal falls apart at that level, with that much pressure to get it done, it means there was genuinely no good outcome left on the table. Just different versions of the same loss. And here is the part that genuinely floored me. Sustaining the business required hundreds of millions of additional dollars of liquidity. And let me be straight with you. Hundreds of millions. Not a small gap. Not something you close with a cost-cutting plan or a new route. Hundreds of millions in cash that the company simply did not have and could not find anywhere. That number tells you this was not a close call. This was a canyon. Now here is where things get really interesting. That Spirit simply does not have and could not procure, Spirit President and CEO Dave Davis said. And when a CEO says that out loud, it means they tried everything. Banks, private investors, government, bond restructuring, merger talks, all of it, and every door closed. That sentence is not a press release line. That is a person telling you the fight is over. That is exactly where my take comes in. But real quick, before I give you my take, this video is for educational purposes only, not financial advice. Always do your own research before making any investment decisions. So, here is what I keep coming back to. Spirit did not fail because of one bad decision. It failed because the entire model only works when every variable lines up perfectly. Cheap fuel, full planes, no disruptions. The moment one thing breaks, and something always breaks, there is no margin to absorb it. That is the hidden danger of any ultra-low-cost business. The efficiency that makes it attractive is the same thing that makes it fragile. And the passengers caught in this, that is the part that does not get enough attention. People mid-trip right now with no return flight. People who booked through third-party sites who are being told to request their refund through a travel agent. People who paid for hotels and transfers that the airline will not reimburse unless their travel insurance covers it, which most basic plans do not. The low price looked great until the moment it did not. For investors, the real question worth asking is how many companies in your portfolio are built on the same foundation. Because the Spirit model is not unique. There are other businesses running on thin margins with no cushion, hoping the environment stays calm. It usually does not stay calm forever. Budget does not always mean bad. But it does mean fragile. And fragile companies are the ones that disappear fastest when things get hard. If this breakdown was useful, like this video and subscribe to Let's Decode the News. We do this every week so you actually understand what these stories mean for your money. And I want to hear from you. Do you think the government should have stepped in to save Spirit Airlines, or was this a business that simply ran its course? Drop your answer in the comments right now.